Now let's talk about what a policy loan is when we borrow against our IBC policies. First of all, let's understand and appreciate the fact that when you have an IBC policy and take loans from it or against it, there's many advantages. First of all, think of it as a line of credit that is guaranteed for your use alone, first and foremost, and is ever increasing as, of course, the policy grows over the years. They also enjoy low rates, typically very competitive, even lower than commercial banks. And you don't have to apply for it or worry about your credit score to get a better rate. Uh, Beyond that, you also have a very flexible repayment schedule. Really, there's no schedule. Once you borrow out whatever the policy loan amount that you need based off the cash value, you can make your payments monthly, however much. There's no minimum balance that you need to cover like you would for a normal loan. Uh, Finally, the interest is not just low, but technically all you need to pay each year. At your anniversary, you'll see that interest portion of any outstanding balance due. And as an honest banker, you want to make sure at least to cover that much. Although technically the principal you don't have to have paid down before each anniversary. Now, when I say policy loan, let's understand that it's not really a loan in the sense that if you took a car loan or like a home loan, you have, a lien placed on the vehicle or the house, certainly first position lien, and it's backed by, a real piece of property. In an IBC policy, there's no such real property. Rather, interestingly enough, the death benefit serves to back the loan. And how much of that death benefit is determined by the cash value. So literally, your cash value serving as a net equity marker determines how much you can borrow from your policy. And the cash values will serve as the collateral for that loan. Okay, so you have your cash values here, whatever that amount is, again, increasing every year. And then you can borrow from the insurance company this much. However much the cash values are, you can borrow and pay down, borrow and pay back. And every year that continues to increase. So you can see there's no interruption to that compounding and the growth. Unlike, when you borrow, typically say something like this marker. If I was to loan you this marker, I would give up control of this marker and give it to you until you return it to me, during which time then I have access and control over my marker. Here, the cash value remains with me. You essentially get to use the marker, the cash value equivalent of this marker, all the while my marker stays safe and secure and continues to compound. So there's a big difference there in the collateralization of these policy loans. Finally, another unsung benefit to this is the fact that these policy loans are private. Okay, they are not reported to credit agencies. So unlike a credit card, line of credit, HELOC, any of that type of reported debt, whenever you borrow from your policy, which again, you can borrow for any reason or no reason. You never need to explain what it's for. Unlike, a business loan or something like that, where you have to furnish a business plan, you can simply, some companies call over the phone, request the loan, and it'll be ACH to your bank account in a few days. But there is zero impact to your credit score. Unlike a credit card where anything over, I think, 30% will start to detract or decrease your credit score utilization. There's no such effect when you borrow against your own policy. So hopefully this was helpful and just a quick introduction and recap of, IBC policy loans as the ideal source of leverage, again, that we can access at any time and increasingly so year over year. Until the next topic, talk to you later.